Hey everyone, welcome back to Corporate Decoder, the place where we dig through SEC filings so you don't have to. Today we're cracking open AlTi Global's latest 10K. And let me tell you, it's a mixed bag, kind of like that mystery candy you find at the bottom of your Halloween bucket. We'll see if they're treating investors or if it's just a bunch of tricks. This report covers their performance for the entire year of 2024, so we're going to look at the overall health of this global wealth management company. Big picture, AlTi manages and advises on a ton of money. I'm talking about folks with serious bank accounts and those who help them navigate all the financial complexities. AlTi had some gains, some losses, and some strategic moves that are kind of head scratchers. Let's get into it. Before we dive too deep, it's good to note the company often pulls information from other documents. In this case, they are saying that some of the details about the board, executive pay, and major shareholders are taken from another document called the Proxy Statement, which you can get access in the coming 120 days. AlTi has a big global presence with people all over the world in different financial centers. They're in the wealth management and real estate business, offering services to super rich people and families. They also manage some investments for institutions, so they have a lot going on, and we need to see if they are staying on top of their global presence. Of course, as with every report we discuss, there's a whole section dedicated to the things that could go wrong. These are called risk factors and are worth paying attention to. A big one for AlTi is the general state of the world economy, or as the report says, difficult market and political conditions. Things like inflation, interest rate changes, and even political instability can really mess with their investments. Here's an important point. AlTi itself doesn't really do anything. It's a holding company, meaning it makes money from its subsidiaries. It can only pay taxes, dividends, or buy companies if their subsidiary level has big consequences for AlTi overall. A large part of their income comes from fees based on how well their investments are doing. So if AlTi makes bad investment choices, the amount of money that they manage will drop and it will impact their ability to even do business. Here's something else. They note that if they don't properly tell clients about potential conflicts of interest, it can damage the business. This highlights the complexity of managing money for different people, especially when those people's interests might be at odds with each other. Since they're a global company, AlTi says that international operations come with all sorts of problems. This can mean different laws, unstable governments, and even things like terrorism or pandemics. That means as they grow into new markets, they might face unexpected challenges and costs. The report mentions a key risk: management's lack of experience with running a public company. Public companies have a lot more rules and regulations to follow, and if the management team isn't up to speed, it could create all sorts of problems. Speaking of risks, and here is a big one, the company admits that they've had material weaknesses in their financial reporting and may have problems in the future. If they can't fix their internal controls, it will cause big problems. Okay, that is it for risks. Now let's dig into the financials, starting with a general warning that they may have to write down the value of their assets, which could lead to losses and negatively affect their stock price, which is never good. Alright, the moment we've all been waiting for, let's take a quick glance at their numbers, at their consolidated statement of operations, and what I immediately see as the big picture from this report is that the total revenues have fallen about $40 million. The positive here is that some of their expenses are also down, so maybe the effect isn't so bad. Let's zoom into some more specific things. Their bread and butter, the money they get for managing and advising clients, that has slightly risen to about $190 million, so at least that is not falling. Now, what about the incentive fees, the amount they get for doing a good job and growing the assets? Those fees are down by a whopping $40 million. This makes sense given the market turbulence of 2024. And finally, one last quick number grab, their cash, meaning how much money they have available, has significantly grown. I'm talking about a $47 million. That is a big step up. Speaking of the company's numbers, we can't skip over their adjusted EBITDA, which is a number they use to measure how well their business is doing on the ground level. The problem is, at this point, it's falling compared to last year. They are reporting $15.8 million, a $12 million drop from the previous year. So revenue is down and profits are falling. This isn't a great look for AlTi. Let's dig into the company's key strengths. The company is trying to emphasize that they have a lot of recurring income that is stable and easy to predict, with clients that stick around and use multiple of their products. It's a bit of a double speak to make it seem better, but the numbers don't agree with what they're saying, and if it was really true, then the revenue is down. Problem shouldn't have occurred. They are also trying to sell you on the fact that they are a large global company, but The risk section of the report makes the global part more of a liability than a good thing and source of stability. And as a result, there are increased operating costs and challenges. So perhaps it would have been more efficient to just focus on the markets they dominate in. They are also trying to grow inorganically by acquiring other companies, expanding their operations, and launching new things. But again, as the risk factors showed, this might come at the risk of stretching themselves too thin and becoming a jack of all trades but master of none. There's been a lot of back and forth due to an existing company, Home REIT, that is related to AlTi due to previous partnerships. As the filing says, AlTi or its subsidiaries may potentially suffer reputational damage from REIT. The company previously reported certain material weaknesses that they have yet to make improvements on, so that is definitely worth keeping in mind. To end, let's go through their plan to grow their business. There's a clear focus on expanding by acquiring other firms. Given the challenges they've had integrating previous acquisitions, this could be risky if it's not managed carefully. They are also very keen on offering values-aligned offerings so that their offerings meet the personal beliefs of individuals, foundations, and institutional investors. I think this is great. In summary, AlTi Global is at a crucial point. They have the raw ingredients to be a major player, a global network, a comprehensive service offering, and big plans. However, key financial figures are not looking great. The decrease in profits along with high expenses raise a lot of questions, and for me personally, I wouldn't recommend. Thanks for watching. If you liked this deep dive, hit that like button, leave a comment, and don't forget to subscribe for more corporate decoding.